Good morning, everybody. Oh, yeah. How's everyone doing? I am live on YouTube for the first time. Well, I think second time, actually. Cybertruck in the shop today? No, I'll bring out the Cybertruck. I got now multiple chats to be looking at, so it's going to be a little interesting here. The YouTube chat, quite a bit of stuff going on there. All right. Welcome to the bajillion-dollar studio over here on the top of a New York skyscraper. Took me years to complete. It's the newsroom. We ain't got much news to report today. We'll look how the market's digesting what's been taking place. We had some ISM numbers come out. Give me a second here. We'll take a gander at what's going on in the market. We'll look at individual names. Get prepared for the quarter. Go over some trade ideas. Analyze what's going on with market net flow. All that good stuff. Let me cut that down a little bit there. Oh, yeah. That's the stuff. That's the stuff right there. All right, let's hop into the computer. Okay. Let me get my chat up here so I can see what everyone's posting. Bernardo, hey, welcome. Tony, Bobby, Matt, Daniel, Noel, DB, Blonda Man, Robert, Kylie, Jacob, Missing Link, Jacob, again. Welcome to the chat. What's up, Aces? What's up, AA? What's up, Trader? All right. Market started off really strong today, but now we're fading in a little bit after the news came out. So let's take a quick look here at advanced decliners. Looking at 77 declining stocks in the S&P 100 to start the day. So not a full-blown correlation by any means to the downside. Looked a lot stronger earlier in the trading session. The market's being held up by a few names. Mainly the big one here is Google. Google, okay? Google's a larger market cap name, and that is the one that is doing quite well. Microsoft's also up about 1%. The laggard here on the S&P 100 looks to be like Comcast and then Tesla, but Tesla's been down for quite some time here, so I don't think that holds much weight overall. Let's look at Bookmap ES, get a good idea of where some orders may be hiding out. There is one level that I'm in particularly very interested in, and that's way down here to about 5250. There's still 600 plus orders, contracts hanging out down at that level. The longer we stay here, the more likely it is going to eventually fill. They have been here for now multiple weeks, hanging out at 5250. So that is going to be one to watch. Now, is that going to reach today? I don't know. I never know that kind of stuff. But it's something to be aware of, right? As far as today goes, we have 52.95, a little bit of liquidity here, but nothing too crazy, okay? So that's Bookmap in a quick nutshell. The big level would be a little bit further down. This is the NQ opening range. We're looking at just the first 30 seconds of the day. That was the high, that was the low, this is the midpoint, and where are we? We're basically where we started, just slightly above it. Now, if I look at Qs of where we stand for the Qs is actually kind of interesting. So this is the 15-minute time frame for the Qs. Let me change a couple of things here. I'm going to remove that, and I'm going to add, just keep the 5-day moving average. Notice here how we came up and we consolidated, and we've been tagging this trend line multiple times. Today, we actually broke through that trend line, which is a bullish sign. We're above a 5-day moving average. That's neutral, so I would consider that to be bullish. I like it more when it's turning up. But right now, we broke out strong, and we're pulling back after the breakout. So could this be a back test to potentially head higher and tag the upper weekly expected move for the Qs, which is standing around 451.33. So that's a good look there. Let's look at market net flow. Market net flow, for those that don't know, it could be quite a bit of people on YouTube because I don't really talk about this too much on YouTube. Give me a second here. Oh yeah, that's coffee. That's that good stuff on coffee. All right. So market net flow, we have this green line, this red line, they're the cumulative net premiums for calls and puts. green the calls, red the puts. When you have the green line trending up and the red line trending down, like so, this right here would be considered a bullish divergence. Down here, you have this gray bar, green bar, sometimes red bar. That lets you know if the price of SPY is moving with market net flow. And this is an incredibly useful tool if you are trading intraday, because you can trade with the flow of the market instead of trying to fight against it. So when you see the market ripping up higher and you're wondering and you don't see this and you're trying to fade it, well, there's good times when you can fade it and then there's bad times when you can fade it. As it stands right now, we do not have convergence. So when you have a bullish divergence and no convergence, which means that this is gray, meaning SPY is not moving with market net flow, you can get contra moves in the market. And that's kind of what we're seeing here as the market's pulling back in to some key levels. So you go into the key levels. What are we looking at today? We actually have a 0-date level here that we established earlier in the trading session at 52.50. And you can see the market's kind of holding up here. Not only there, but we also have the 52.50, which has been an important gamma exposure level. That's, if you just zoom back, right? Price has been kind of magnetized. It's like gravity. It pulls it back in and it pushes it away and it pulls it back in. You can see here where we tagged it, right? We finally broke above here on the Fed announcement, and now we're coming back in to this level. So 52.50 seems to be a very important level to hold. But traders, they're still reaching out further to roughly 5,300. 5,300 from a net gamma perspective is the call wall. So this lets us know that, hey, 52.50, we're getting kind of hung up here, but traders are still positioning themselves out further. Doesn't necessarily mean that it has to get out here, but that's what they're currently doing. Now, the flip side to this, if you look to the left of the screen, there's not much below us as far as terms of support, right? So that would be a little bit more, I guess, concerning. You can also pull up things like the CTAs, so commodity trading advisors, and you can see here that they have been really positioned max long now for quite some time. We'll see if this loads up. Give me a second here. Okay, so you can see here SPX CTA positioning, and what happens here is if we're max long, what happens when we start actually selling off in the market? Well, you can get some downside convexity, and you can have the momentum traders, trend traders start to see more of a push to the downside, but that just has not been the case. So there's risks, but as it stands right now, if we're looking at the two things that really change market conditions for me specifically, I look at the gamma flip line, which is fairly new into my process of trading, but it's incredibly useful. So the gamma flip line is at 52.30. So 52.30 is right here, and we're above it. So when we're in positive gamma territory, this is where the market makers or dealers look to buy the dip, sell the rip, buy the dip, sell the rip, buy the dip, sell the rip, and you get these slow kind of moves up north, volatility suppressed. When you get into negative gamma territory, that's where selling begets selling, buying begets buying, and you get, and this is not to say it's bullish or bearish, it means that volatility increases. So you can get rip your face off rallies, and you can get big sell-offs, which we've seen multiple times, like for example in 2023, when we had the 10% correction, we went to negative gamma territory during those 10% corrections, and we saw big rips up, but big rips down. Currently, right now, we're below that 52.50, but trading just around it. As far as the economic calendar goes, this week, we had our big stuff basically pass already as far as more of the tier 1 type data. The ISM manufacturing PMI just passed. Looks like it came in at 50.3. Consensus was 48.4. So, I mean, that's positive because we're not under the 50 marker, which would be considered contractionary. Okay, Tuesday we get some JOLTS numbers. Red Book, got some Fed speak, a lot of Fed speak. Wednesday, ISM Services PMI. We'll see what that comes in at. And then Fed Chair Powell, I don't know what he's going to be talking about, but it looks like he's going to be out there on Wednesday. And then Friday, we get non-farm payroll. So we get a lot of stuff coming up this week. It's a big week as far as data goes. And then on top of all of that, if I pull up, we have S&P 500 sinking off here just a little bit more. Just careful here. Careful here. Okay. This is where like people start to look, say, okay, should I be buying the dip? Should I be buying the dip? Should I buy the dip? Well, let's take a look, right? So how do you answer these questions if you want to buy the dip? If you're trading intraday, that is. We're going to look at some individual names here too for more swing trading. I still think that this is more an environment for swing trading than it is for day trading, given the context of being above the 5-day moving average. Let me pull up this buy. Being above the 5-day moving average, and then in positive gamma territory. But we're not far off, right? Okay. Let me pull up my Thinkorswim platform. And I'm going to pull up, I'm going to customize this, and I'm going to go days to earnings, item, okay. And what I'm going to do here is I'm going to show you some of the names that are going to be coming up. So it's probably hard to see or hard to read. That's okay. But right here, you can see that we're about 9 days out, right? 9 trading days, 10, 11, 12. So a couple weeks here into getting the bigger earnings for the names that are in the S&P 100. And always when we start off the quarter, it's financials that report first. So we're going to have, in 9 trading days, BlackRock, Wells Fargo, Citigroup, JPM, Goldman Sachs, even Lockheed Martin, Morgan Stanley, Bank of America, and et cetera, reporting. And it's going to be interesting to see how those ones play out, because if you look at financials as they stand right now, financials have been on a monster move. And this is not me just saying that it's a monster move. Take a look from October low to where it stands right now. It's moved in 5 months or 6 months or whatever. $10 per share, $10.50. If you go into the trade tab and you look to see an expected move of $10, you've got to really go out till January of 2026 and maybe even December of 2026, right? That's 2 years. So what happens typically in 2 years happened within 5 months. So these are just crazy, crazy moves in some of these products. So it's going to be very interesting to see if eventually we see a trend break where we go into more of a period of consolidation. Ah, yes, coffee good, coffee good. I'm going to write down some of these names that people are putting up in the chat. So if you have any names that you want me to pull up, make sure if you put them in already, I'm good. But if you want to, I'm gonna just kind of read them off here. So we're going to be going over, it looks like coin. We'll go over the index products too, because we got to look at some of these expected moves. We got Riot in the chat, so some Bitcoin stuff. I guess we'll pull up the Sailor to Shift tool. DJT, another more of a trading vehicle right now, given the context of all that volatility. Palantir. Oh man, I hate this auto, whatever it is. Okay, we got Meta. Yeah, definitely Meta. Meta's a big one that we'll look at. DJT, WW. I'm not too sure if that's like an acronym for saying something or not, but I'll put that in just if it is a ticker. I can't remember. Bitcoin, obviously, we'll pull up Bitcoin. I think we'll just use the Sailor Shift tool for that. BITF, yeah, that's okay. Yeah, well, same thing here. I'll just put that in there. Okay. QQQ, SQQQ. So for QQQQ, for SQQQ, we'll really just look at QQQ and look at it from that perspective to see if it could be shorted. I'm assuming that's kind of. Okay. So there's some names. SMCI. Yeah, you just keep dropping them in the chat if you want me to look them up. I'll have to revisit it. Amazon, that's a name that I'm in. I'll go over my portfolio, what I have going on right now. Adobe. All right, what's up? What's up, Jalen, by the way? Johnny, hey, what's up? Okay. Those are some of the names. So a little bit of price action slippage here. No. Give me a second. Spilled on my keyboard. Okay. Where were we? The stock expected moves for the week, because I didn't put out a market brief episode. The expected move for SPY, we have a lower level of 516.75. Right, here's the lower weekly expected move. Upper weekly expected move is up there at 529.39. These are the daily expected moves. And when I look at this right now, I think the last video we talked about window dressing. And then on Twitter, we looked at a potentially move higher into the target of around 5,300. So we broke through this downtrend, very similar to S&P, the Q, sorry. And right now we're just consolidating. We're pulling back right now in the midst of a pretty heavy duty week. And this is the start of the quarter. So it's going to be important to watch flows and all that good stuff. Before we get into all the names, let's just take a quick look at also just some of the important intermarket assets. One of them being the 10-year yield. So we'll take a look at TNX. You can look at TNX. You can look at ZB, ZN. You know, it's up to you. I usually use TNX as kind of like the proxy for the yield or the 10-year yield. A little bit simpler. Okay, so the 10-year yield, we've been talking about this little pullback, and right now we're seeing some strength. So when the 10-year yield rises, this has put pressure on various growth names that we have seen in the past. Will it continue? Well, that's a possibility. We're kind of coming back up into around the 43.5, which is 4.3% in the 10-year yield. So if we start breaking through this, are we going to continue to head higher, and is it going to put pressure on the markets? Now, the reason why I say it's been put pressure on the markets recently is because over here, if you look at October, when the 10-year yield fell at a rapid rate of change, right? Also, what was moving down at that same exact time from October down very strongly was the dollar. And then what happened to the S&P 500, right? We'll just pull up the SPY as the proxy. In October, when both those assets were falling and falling, the S&P 500 was ripping into the year end. Now, what I find interesting here is that correlation was negative. The S&P 500 continues to move higher. We've called out names like, hey, it could be because of NVIDIA, right? Because NVIDIA kept on going and going. Maybe that's the case, okay? But now when you look at the 10-year yield, it's actually been going up, and we're sitting not too far off around the year high. And then also the dollar. This right here is a pretty strong move in the dollar, right? We're actually cresting into new highs for the year. So the dollar's moving higher, the 10-year yield's moving higher. Inflation was bumpy, right? According to Jerome Powell, it could just be a bump in the road, or is it something else? Now, when the 10-year yield rises like that, you can look at things like oil. Oil has been moving higher here too, right? We talked about this consolidation here. We're breaking out. We're seeing some follow through. So the 10-year yield rises, oil rises, or oil rises, the 10-year yield rises. There's typically a strong correlation. And you can look at energy names. So back in, I don't know what video it was, but a few weeks back, we talked about various energy names, how they were contracting and consolidating. We talked about PXD, OVV. We talked about XLE, right? XLE is just the ETF. Back over here, we contracted, and now we're continuing to move higher. Do you chase this? No. You wait for consolidations like this or like this to give you opportunities. But right now, it's hard to imagine that inflation, is going to be coming off substantially given the context of what we're seeing the markets do. Another kind of interesting thing taking place is gold. Gold crests into new highs again today. You can see 2286 on the gold futures. It's since then come off, and that's probably because the dollar, right? If we're looking at intraday, right? So if we look at this intraday, how it kind of came off like this, just take a look at the dollar, and it probably has its effect where the dollar is rising intraday, right? Boom. So this move right here in the dollar really put the kibosh on that rise in gold. Now, if this comes back off, maybe that brings us back. But when I look at gold, it's not something that I would just be like, yeah, right now I'm going to be entering into it, right? No, I wouldn't be. Given the context of what just occurred after this breakout, this consolidation, I would look for more of a consolidation on something like this. We'll take a quick look at Bitcoin here too as well. I'll try to actually pull it up on, let me pull up my sailor to shift tool because it is a new week. So we'll see where it's kind of starting off at. Let me see. Okay. All right, so here's the sailor to shift tool For those that don't know, it's mapping the rate of change, the 4-week rate of change between two assets, Bitcoin and gold. That's why we call it Sailor to Shift. Sailor, Michael Saylor, is the Bitcoin maxi, and gold and Schiff is the gold maxi. When this crosses below the zero line, that is a signal, a sell signal, not an official trigger, but is a sell signal. So it gives us pause, potential warning. But we typically, as far as, I mean, everyone creates their own strategy around this stuff. But my strategy, I have to wait for price action to get below the prior closing week. And when it does that, while it triggers a new signal, that would be the official trigger. So for example, the last buy signal and trigger was over here, right shortly after a sell signal, sell trigger. Then we crossed down beneath the zero line, but there was no trigger, meaning that that week didn't, like this week right over here, it's hard to see, didn't cross below the prior week low. So you keep it on the buy signal, buy trigger, and we've had that follow through all the way up. It's caught big moves. It saved us from big declines. You see some whipsaws here and there. What are we seeing right now? We're seeing the rate of change between Bitcoin and gold coming off, but it still hasn't closed weekly below there. So there is no technical sell signal. And remember, it's not going to time it perfectly. Okay. It's not going to time it perfectly, but there has been no official sell signal. And then once we get the sell signal, then you look for the sell trigger. Okay. But as far as the price of Bitcoin goes, I mean, it looks like it's coming off slightly, but it's still kind of just consolidating around these highs. So S&P 500 still continues to come off today. Like I said, the big level to watch, 5250 on ES, right? On ES, 5252, whatever. So we'll keep an eye on that. Where's my Thinkorswim platform go? I recently just upgraded my computer system for streaming. So I've been practicing on Twitch, and now I'm finally doing it on YouTube. And let me just tell you, the computer makes a huge difference when live streaming. This thing was bogging down on Twitch. It was slowing down. Now I'm on 3 platforms right now, running all this software, which is intense software too. It's not like lightweight software, using Bookmap and then Thinkorswim and streaming software on top of all of that. Do we have 185 people in this chat right now? Is that like, or is that total streaming? That's crazy. I just see that on Twitch. That's probably total viewers, I imagine. Okay. Is it? Jeez. That'd be crazy if that was just Twitch. Oh my gosh, I think that's just Twitch. What's up, everybody from Twitch? But yet the chat, no one's in the chat. I think it's total. Oh man, I don't know. Because in YouTube, it says, YouTube, it tells me a different story. YouTube, it tells me that there's 157 people over there. It's crazy. Twitch says 30 here? Okay. That's probably what it is then. Yeah, if that's 30, then that makes sense. Then I think it's total. Okay. Okay, that makes sense. Doo-doo. Okay. Oh, okay, cool. Yeah, Harrison, yeah, selling me. Yeah, cool. Thanks for the updates there. All right, let's pull up some of these names that everyone's pulling up. That was just a quick snapshot of kind of what it is that I'm seeing in the market. Take a look here before I continue, because no one's going to be talking about this unless if they're watching my stream, and then they're on YouTube too. They're going to talk about it today after seeing this. But look at HYG. Look at that come off on HYG. Tell me that that's not a big sign right there. So not only we see gold that's been just reaching higher and higher, take a look at high yield. That's a huge move on high yield. Like, that's no joke. That's a big hit, right? So the reason why I say this is because we look at smart money and dumb money, right? Smart money being the bond market, dumb money being the S&P 500. And this has been looking very bullish, right? We're talking about the divergence. We talk about the divergence and we look at it at smaller time frames. And HYG, we haven't been talking it too much because we've been saying, I'm not going to read too much into it because it's still bullish, but it would look very obvious in hindsight. That's kind, we have the price action putting in higher lows and price action putting in lower highs. It was contracting, going sideways, while the S&P 500 was ripping higher. But look at that break today, while the market was going higher. Where is it at now? It's down on the day. Okay, that is a big break. So this is definitely worth keeping an eye on. Because if we get follow through to the downside, I mean, that divergence, it's going to have to resolve itself, right? You see high yield coming off at a rapid rate. So today's move, it's probably brought to you by the bond market. Look at TLT coming off pretty strong. Okay, so that means the 10-year yield, right? Obviously, we already previously stated it's moving up pretty strong today too. So this right here, this should be a little eye-opening as we're seeing all this stuff happen from an intermarket perspective. Okay, I mean, no surprise, no surprise. We've been going straight up like a rocket ship, right? So little moves like this don't really like that's nothing, right? Oh wow, oh no. But there will come a time where you look back to the left of the screen, and you're like, dang, we've actually been consolidating sideways for 6 months, 3 months, a month, 2 months. We haven't gone anywhere, and people will get excited about little rallies up and then pull back down, and then the world's ending, but it's just consolidating. Still in a very bullish context. The S&P X. All right, let's pull up some of these names, like I said. Okay, let's take a look at coin. So the reason why I showed the sailor to shift tool is because that actually works pretty well with cryptocurrencies too. So then you get a buy signal, buy trigger. It could be good for cryptocurrencies and crypto related equities. As far as coin goes, the last time we really kind of looked into this was this consolidation here, pulling back into the rising 20-day moving average, right? And that right there, and we looked at the ADX, that right there, the reason why we pulled this up is because it came up on one of our scans called the Holy Grail scan. The Holy Grail scan being a strategy from the book Street Smarts from the 90s. And it's really just a pullback, very simple to read strategy that gives you a clear defined risk to reward, risk being when it breaks above the prior high to swing this high. So that played out perfectly among some of the other names. So I look for these little consolidation. And right now what we're doing is we're getting another consolidation here. Okay, yeah, you have a little high, a lower high, so a little bit of a negative divergence in the RSI. Do we need to read too much into that? I don't think so. I think we just need to pay more attention to the price action. So as it stands right now, like I'm not going to enter in blindly right here. But what you look for is, you'd look for strength to come back in after the pullback. Hey, AM, thanks for the Prime subscription there on Twitch. Welcome in. So right now, all I see is just a consolidation going on in the price of coin, which is a positive sign because you get this big move up, you get some good volume behind it, price expands, price contracts. If we look at the 15-minute time frame, it tells a little bit different of a story from more of like a smaller, perspective. You see now starting to get a little bit lower highs, and we're below that 5-day moving average and the point of control. So, I'd feel more confident if it starts breaking back above these levels, tightening back up, and then going for its run. But you can see here, it is kind of coiling up right now. You can potentially call this, a head and shoulders, whatever. But all I really care about, because all patterns to some extent, they go through periods of expansion and contraction. Right now, what we're seeing here, albeit, a little loose and sloppy price action, is contracting. Right? We have a low, a higher low, a higher low. We have a high, lower high, lower high. Okay? So tighten up here, tighten up. And then if we can get back above a 5-day moving average, I mean, that opens the door for better risk to reward, right? So if it goes like that, let me show you. If it goes like that, and you break out after, building up these higher lows, it gives you more defined risk, right? That's your risk. Or, you can break it up and have, or a smaller position to have that type of risk. Right? It's all about controlling what we can control. We say that very frequently. So for those that don't know about that, that's what we talk about, is controlling what you can control. Oh, you know what? That isn't total, because I have Twitter up too. Why doesn't it keep track of my Twitter live? Twitter live is crazy sometimes. Unfortunately, there's not really any, chat or anything that I can see on Twitter. There's like 500 people over there. All right, so there's coin. Let's go to Riot. I mean, look at Riot. Riot's very sloppy. So the first thing I look for is trend. The trend is, the 200-day trend. It seems to be up, but where price action is below it. The longer we stay there, the more bearish. You can look at this and be like, hey, it's a bear flag. But really, the short term, medium term, they're kind of just neutral. And even the 200-day, it's more neutral than anything. It's not really rising here. It's kind of just flatlining. So I don't really see a trend. I see just a range in Riot. Now, if we zoom out like to the weekly, we can get maybe a little bit more clear picture where you can see the high, the lower high, the lower high. You have a low, a higher low, and a higher low. So you do, albeit these are very, very wild swings. How much so? You have a 57% decline on that one. You have a 49% decline there, so they're getting smaller, right? And then you have a 41% decline there. So if you can withstand the volatility, okay, maybe if it breaks back up, you can play it up back up to the upper part of this range. But as it stands right now, after Bitcoin making a big run, and this is not really participating, it's kind of just going sideways to down, it's not my favorite. It's not my favorite. What would make it better? I mean, like right now, like see the price action gets tight here and now we're starting to break down from it. So you'd want to see this price recover and tighten back up. But it looks like on the rallies, it's like a gap and go. And it like gives no opportunity really, which is, you know, a little bit harder to trade. If you like this company from a fundamental perspective, maybe it's a better for investing, buying and holding, and then having, you know, ideas for stop losses from that perspective. But when it comes to like executing, it's kind of all over the place. It's kind of all over the place. I feel like that's like a lot of these names, right? Mara, I think we talked about here when it contracted, but even the breakouts were just so aggressive. You get this shooting star there. You can also call this a, you know, potential bear flag. It's a bear flag in somewhat bullish context. So, you know, okay. It's always more to stack the ideals in the favor. So if it's like, oh yeah, it's a bear flag. Okay, yeah, but is it above a rising 200-day moving average? Is it just a pullback and potentially putting in higher lows? You always got to consider that too. And the reason why I say that is because look at FXI. Look at FXI today, right? So this is one that we posted this on the trade ideas, KWeb, and FXI. And FXI, look at, we talked about it on this day. It was pulling back in a downtrend, but we said, hey, and people can look at this and be like, oh, it's bearish because it's a bear flag. Okay, maybe, but we're seeing a low, a higher low, a higher low, a higher low. We saw this period of contraction, then it expanded out, and then we're seeing it again. So this right here, if you entered in on that day, I mean, it's up 2.5% from that day. KWeb also broke out of there, you know, 2.87%. And if you traded, you know, leverage like YINN, yin, right? You know, it's up probably around 10% from that day. It was up 10%, but it's off the highs of the day. So we're kind of coming off. Okay. DJT. So this is, what is this? Truth Mobile, right? The Donald Trump technology thing. Yeah. So it's getting a lot of attention, right? It's getting a lot of attention. Why? Because the volume that's coming in and the moves that it's making. When I look at this, like, I mean, this is not something I would just blindly enter into. Why? Because look at the range of these candles. See how huge they are? We're in a period of expansion. We're not getting tight price action, tight consolidation. We're getting an expansionary move, high volatility. So if you day trade it, that's one thing. But if you're trying to look for like a good entry for a longer term setup, I mean, it's good to find bases that build. So, I mean, if you want to consider this a base and then a base breakout, perhaps a back test, and then seeing strength after that. But it's coming in right now. It's a little all over the place because of the hype. So it's always good to see how price action settles in some of these names. But I mean, you're coming from 2023, it came up, what, 363%. And now you're seeing it move into 4 days down 31%. So if you are putting this type of stuff in your portfolio and you're really considering actually growing a portfolio over the course of time, you should always pay attention to the beta of your individual names and then the position sizing, because you can only control those 4 things, right? What you buy, meaning DJT, when you buy it, meaning looking for the price action, how it sets up, how much you buy it, so position sizing, and then when you get out of it, when you sell it, when you stop out, etc. Okay, so that's the 4 things. You can't control, you know, where it goes. Okay, we're not Nancy Pelosi here. Palantir, PLTR. I'm sure this is getting attention in the Fin community of a head and shoulders pattern. Okay, a head and shoulders topping pattern, right? You get the left shoulder, head, right shoulder. It's so clear as day, right? Head and shoulders, like, yeah, you can see that as the bearish structure. And then you have the price action tightening up here, and we're expanding to break down. If we start breaking back above the neckline, it negates it. It negates it, right? And then you see where it goes from that point. But you got to see if price is pulling actually down after a very bullish earnings gap above and into a rising 5-day moving average into a rising 20. So yeah, can this crack down? Head lower? Cool. Yeah, okay. But what if it goes like this? You know? And then we start breaking back above this high. Well, it negates this whole bearish pattern, bearish everything. All right. So as I see it, because we play this down here, as I see it, it's literally just consolidating its earnings gap. It's been going sideways. Has a little squeeze higher, pulls back, and it's going sideways. So yeah, somewhat of a bearish topping pattern, but also wait to see how it, wait to see before executing to see if there's strength that comes back in and if we start taking back this right shoulder. But consolidation there in Palantir. I'll go over some names that actually look actionable. Some of these names they just don't seem actionable at all in this current moment. I mean, like, look at, if I look deep enough, I can probably find a trade idea here, okay? Like, I could probably oh yeah, now I can enter in on this time frame. But lately, after this run up in the S&P 500, I'm just looking to protect the capital that we made. I've shared the P&L curve multiple times. I don't know if anyone's on YouTube that, you know, needs to see it or wants to see it, but I've shared it many times. So there's Palantir. We'll pull up Meta. So the trade with Meta, in my opinion, after earnings was right around here. So you can see that annotation, how we pulled back nice and softly. And then the psychological level was 500, got above that, but we've been trading basically around 500. So Meta to me is also just consolidating. As far as like tightening up and looking for like a setup here, I'm just trying to see from a risk or reward standpoint, like when we tightened up here, we broke out, it's pulling back a little bit more. I prefer to see strength come in a little bit more and then put in a higher low. Because if it does that, then you'd be looking at price action kind of contracting here more to maybe make it a larger move. That's actually similar to what Microsoft did, right? Microsoft did that right here, right? You can see got a little bit tighter, then we broke out, we pulled back again. The reason this line is here because I entered in on that day. Probably take some off here soon, but the target from Microsoft would be into this box. That's just a technical measured move. It's basically taking the length of this or the length of that, brings it up to here. Just a technical measurement. So yeah, Meta looks good, but it's also came far and fast, and now we're just seeing it consolidate. And sometimes when we get these consolidations, it builds out longer term basis. So Nvidia, for example, right, had all the attention in the world. And what happened on this day where we saw this massive volume that we called out? Said this is where you typically get longer periods of consolidation. Well, we went straight up. We finally saw the volume. People say, oh, it's bearish, it's reversing. Well, is it reversed? No, not really. It's just consolidating. It's going sideways. Trends don't go down without a fight. So right now, we're just going sideways. There has to be some sort of a catalyst, most likely, to really drive this thing, down. To take it out. But right now, you can see we pulled back sideways. We saw it move up. We're not far off of 1,000. The market probably wants it at some point. When that is, I don't know. If we take a quick look back into the S&P 500, you can see we're kind of holding lows of the day. Still have that order down there beneath us at 52.52. Market net flow. Market net flow has crossed over to bearish. Now, there's not really much of a divergence here. So you can see the green line came off strong. But as we said at the beginning of the stream, you have the green line above the red line. So that's a bullish divergence. But we had no convergence. So this is where you get those contra moves. And the market continued to flow downwards. So now, seeing that we have a bearish divergence, and we have no convergence, this is where you can get contra moves, meaning to the upside, but there's not really a divergence here. Now, if this starts turning red, that's more bearish. It means that the dealers are really going to the downside. So you don't want to really fight that until it changes. So what would be better here is if the green line turns back, the red line turns back down, we start to see those spread back out. That would be a more bullish case, and this start to turn green again. But right now, we're getting red going up, green going down, no convergence currently. And if this starts to turn red, then that could be not the greatest sign. But overall, if you look at price action from an absolute perspective, we're coming down into a rising 5-day moving average. We're above the prior breakout of the Fed. I think that was the Jerome Powell, the JWAP over here, right? The last time he was out, we broke out, we moved higher, and now it's pretty steep. But you can call this potentially a wedge here too. Okay, if you look at the Qs is coming in. It came into its daily expected move and it found resistance up in this level. All right, so the market said, hey, we anticipate Monday being this for the expected move. Wait, was that the right expected move? Did I get that right? Let me see if I updated that. Looks a little off. Let me double check. 447.20, 440.80. Yeah, those are the right ones. So it came into it and now it's pulling back. So you want to see this also recoup. Is this a bear trap? I wouldn't rule it as a bear or a bull trap, quite yet. Right? I consider this more sideways price action as it stands. Looking at earnings this week, nothing that stands out. It's going to be the earnings season is starting up in another week or so. All right, let's update you on some of these gamma levels, see if anything changed from a 0-date perspective. 52.25. So 52.25 would be down here near the gamma flip line. So if we do get considered more downside, that would be a level to eye in on as potentially the low as it stands right now from a gamma perspective of the day, unless if they really start reaching out further. But 52.25 right now could be a potential floor for the day. And that's right next to the gamma flip line. So I'd say this could be the range from the downside. Clone. I'm going to make it green. Let me change that up. And then we'll update it if it really changes dramatically. But right now, that's kind of what it's telling me. Style. Come on now. Green. Okay. And then to the upside, so that would be more of the downside watch. Okay, that would be the downside watch. The upside watch would be probably 52.50. Yeah, probably 52.50. I mean, it could be a little bit higher than that too, but there's not much between 52. There's kind of this air pocket between 52.50 and 52.70, so it's a little off. But that's what I'd be looking as far as the range for the day. 50, yeah, and that's kind of what we established early in the trading session here with the 0-date levels. So unless something changes dramatically, that would be kind of the ranges that I'd be looking at. 52.50, 52.25, it kind of extends up further. It's a kind of an air pocket there. So the way you would determine that is if market net flow really started to get bullish, but it just hasn't done so yet. Okay. So you trying to buy this dip here? If I was trying to buy this dip, I mean, I wouldn't. I just let it go. If it goes up higher, cool. But I'd be looking for this to get more bullish for me to actually be a little bit more interested here. So this is not the day for me to start executing into. It's kind of like watching to see how the market, like the big players, are going to start adjusting and getting ready for this quarter. Let's take a look at some actionable setups. I posted some in the trade ideas. I'll share some here if you guys are not in the Discord community. You can, I think in the pinned comment or in the description or somewhere, I have the link there to get more information where I put the tight list. Let me see here. Where is it? I got to Apparently with YouTube, I have to make thumbnails and stuff for the live and then get it all set up. And then apparently, like, I don't know, maybe I have to have the schedule set up too. Get it all set up, get it all ready. All right, I'll post some of these trade ideas, go through some of them. So I'm just pulling some of the names that I posted just the other night for just the community. So this is Qualcomm, and you'll notice that the ones that I'm showing are periods of tight contraction. All right, so look at Qualcomm, for example. Qualcomm's contracting, right? We posted it obviously on this day. Today is what we're seeing follow through with that. But like, look at here. So you see the price action, how it's moving higher highs, higher lows. The spread between the moving averages is positive, right? You have the 20, the 50, the 200, they're all pointing up. And then you look for pullbacks, you look for consolidations. And for example, you see this one right here where you see a low, a higher low, and then price action coils up here. And you get a strong breakout. You get the volume to follow through. Okay, so you look at volume, the breakout. Yeah, it's all good. And then you see price action start to consolidate and volume start to dry up as price action here gets pretty tight. You can see that in the range of the candles and between the lower highs, higher lows. And now we're starting to break out here. And a breakout typically means that, hey, there's a strong chance that strong stocks get stronger. That's typically the thing. So a retest of this high at 177.60, it was likely at some point. Chances are this isn't the high that's going to be lasting forever. If you thought that here, you were wrong. Thought that here, wrong. Are you going to be wrong here? If you go back further, you'd be wrong, you'd be wrong, you'd be wrong. So it's trending up. Doesn't mean it has to be a straight shot, but that's what we look at. We see, hey, the risk could be this, but the reward could be that. And eventually, you know, you'll get hit. But the moment you catch one that keeps going and going and going, it makes up for multiple losses on these tight periods. CHD was a pretty nice consolidation here too. Look at this one. I mean, look how perfect this looks, right? By perfect, I mean, as far as like the contraction goes, giving us a good risk to reward. So like over here, right, you have this trend and then it gets tight right here. The tightness gives you the better risk to reward. Breaks out, does the same thing over here, gets tight, more tight over here. Right, you see the volatility enter and it goes, and this is like one of those, big reversal days, right? This is kind of, that was earnings. And then it follows through to the downside. It's an expansionary move. Do you just enter in blindly? No, you wait for contraction. So yeah, you're not entering down here, but right here, it gives you a better risk to reward because you don't know if this was going to go down or so forth. Now, what's price doing? We have a strong move up. You have big pockets of nice volume. Now price is getting a little choppy up in here and you see pretty good days. Like, so this day it opened down, but closed at the high, good volume day. Even this day right here was a big down day, but it was on declining volume. This day right here, this was a distribution day. This day was a distribution day, but price is above it. This was a day higher with higher volume. So what I look at is a breakout of this prior high and play it out as far as a continuation goes. And then if it breaks out, and then it turns back around and comes right back down here, that would be a stop out. And then you would just restructure the trade. Say if it goes like this, say if it goes like this. Okay, who cares, right? You can restructure the trade. It stops you out once, and then you could come back in and then go from it from that perspective. That's how I look at these type of setups. S&P 500 still seems to be coming off here. You can see the bearish divergence is picking up speed, and we're losing convergence right here, which means, right, that's getting more bearish because of the bearish divergence. So if this turns red, that's still one of those things to watch out. Qs is down on the day, but it's rather unchanged. It's flat. As far as where price can go to, I'd still be looking down at the gamma flip line to 52.25. Okay, so if you're trying to like buy these dips right now, you know, winging a prayer. It's not giving us. Now, let me tell you something. this is where like this really comes in handy. If the market was pulling back, but we saw the green line above the red line and we started seeing this take place where it was losing convergence go back, that right there would tell me, because that was wasn't that Friday or the day before we started seeing that, as I was like, just it looks like we're about to get a squeeze here of some sort. It looks like a squeeze of something is coming. That's what it looks like it was preparing for. And sure enough, that came. It took some time, but it came. We don't have that here. It's just not here. So you'll get bounces. Boom, you'll get bounces. You'll get people get so excited. You'll get consolidations. Okay, but right now, watch out, right? When did we say why? We said watch out a while ago. Watch out. Don't get clipped. Come on now. We wait for the consolidation. All right, give me a second here. I'm gonna take a quick break, get some water, refresh. I'm gonna put this up on the screen. Take a 5. Actually, I'm gonna probably have to get out of here pretty soon. We'll go over a couple more things, and I'll close out the stream a little bit later. This is gonna be a quicker stream today, just getting used to the YouTube thing being added in, and figuring that kind of stuff out. Quick break. Hey, what's that? What's that? What does that mean? What's that guy jumping around? Hey, what's up, Goku? Quick break. Quick kick a break. Be back at 8:30 PST. Abadoo. Oh, yeah, I haven't showed you guys. Yeah, see, I can't bring out my rocket ship today, people. Not yet. No, now it's going to go higher, though. Now we're going to get the bounce. Got to bring out the Cybertruck, too. We'll go into Tesla. We'll take a look to see what Cybertruck's doing. Right now, we'll just pull up the Chad desktop. How about that? Chad desktop. Boom, boom. All right. I'll be right back. I didn't bring up Amazon yet, Jalen. I will in just a moment here. I'm leaving ES on the screen of Bookmap right now. Oh, we're back. 2 minutes early. Let's go, let's go. Hi, everybody. Chicka, 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 bang. Okay. So we're seeing a little bit of a bounce here. Oh my goodness. Got some contracts right over here at 52.95. See, it's kind of coming in overhead over here. So we're getting a little bit of a bounce in that downtrend. Whee! Does that mean anything? Not really. Not really yet. Flown between this range. I'm going to be getting off the stream here very shortly. Why? Because I'm going to go to the gym and work out, exercise. And then we'll recap this on a market brief tonight. Yeah, not just this, but where price action closes, give some more insights, clarify it a little bit. It's been fun actually streaming on YouTube. You know, we'll see how this one goes. We'll see how YouTube goes. It looks like I have to make thumbnails and figure out the intricacies of multicasting. And see if I want to turn this into a show or just more hanging out, because I do enjoy hanging out. Or maybe keep it shorter on YouTube and then just come over to Twitch for the longer term ones. I don't know yet. You know? Yana. All right, so Q's coming back slightly here. All right, it's been a pretty strong move to the downside. We're seeing a little bit of a bounce. Are we shocked? Not really. SPY, it pulled back into where? It pulled into the 5-day moving average and the Fed anchored, the JWAP, the Jerome weighted average price. Okay, so that's where we're kind of finding some support at. We talked about, hey, it's pulling back very sharply. Could it be just, you know, a wedge before it heads higher? Honestly, it could be. I mean, it's still bullish context. It's going sideways, right? Put in a new high, coming off a little bit. Market net flow. This is where we get the contra moves, right? So we have a bearish divergence that's forming, but we still don't have convergence. So this isn't red, meaning that we can get these contra moves, and we're getting a little bit of a contra move right now. Now, if this starts turning red, that'd be a little bit more bearish. 521. Let me go here really quick. Change. 521. So 521 is acting as the magnet. 521 is a little bit deeper, like right in here. That's kind of where the pull is from 0-date perspective. See if anything's changed from a net gamma perspective. A little bit has changed, more just build up at the 5250. And then the put wall, there's stuff still growing towards, you know, behind the 5225. I think that that's worth noting, because if we start breaking 5225 and this starts all growing, we can get a little bit whirly and out of control, pulling more to the downside. But as it stands right now, 5225 is kind of the established quote unquote floor right around that gamma flip line. So this still kind of remains that level. I'm looking at SPX Owanda, right? It gives, you know, just continuity of the chart. You can look at just regular SPX2. One's not better than the other, and you know, it's not perfect by any means, but it's just a levels to pay attention to watch. Okay. Let me see here a couple other things. Just see if anybody's been saying anything up here. RS, IWM. Oh, we'll pull up IWM too. Stay on live for us boomers. For sure, Jamie. I plan on staying live now with YouTube. Twitch is the one that helped me get all this set up, but now it's been about 3 months with them, and now I'm looking to expand out. So I appreciate that, Eric. Okay, we'll take a quick look at IWM. I have the weekly expected moves for IWM if you want them. IWM, the people in the Discord already have 214 to the upside, 206 to the downside. That's the weekly expected move, and we're above a rising 5-day moving average. It's down about 1% today. Look, IWM has been all over the place, right? IWM, we've been seeing strong breakouts, and then people get super excited, and then it pulls back in. What I'm seeing here is, you know, it could be twofold, right? I'm looking at this, and I'm just seeing higher lows, higher highs. That's positive. And then you look at, hey, but what's this actually doing? Like, it literally looks like it's just, you know, contracting right now. So is it going to contract very tight and then break to the upside, or are we going to just fake everybody out and break to the downside? The one that interests me the most today was HYG. Look at HYG. that is just such a big break in HYG today. We haven't seen that type of move for a minute. And that to me is concerning. Disconcerting, I guess you can say. Then you pair that with the rising dollar. It's at the highs of the day, at highs of the year, sorry. So you have the dollar going off. You have the 10-year yield that's rising. You have HYG right, getting clipped. Gold just hit an all-time high. I don't know, people. I don't know. So like, I'll share my P&L thing here really quick, and I'll show you kind of where my thought is, because I'm looking at, you know, what I have on. Yeah, I got to get going. I got a gym, and then I got a men's group. Hang out with the boys. Hold up. Come on. How do I clip this? I'll just go full clip. Let me see. Let me go all accounts. It's easier. Come on. Why does it look so weird? There we go. There we go. I'm only going to show the P&L curve, not like everything, obviously, for obvious reasons. For obvious reasons. All right, so we bounced up. We'll pull them back in a little bit here. So if you're looking to buy the dip, I mean, look for a higher low and then a higher high, but it's just not there yet. You got to be patient in these things. So here's why my thought process is kind of where it's at. So this is the P&L curve. This is 1 year, right? 1 year. Most of last year, I was pretty chill, right? I wasn't trying to jump into all of that stuff. It's not about really catching the bottoms. It's feeling a little bit more confident when we are going to move higher. This right over here is around October. And since then, I mean, look at it. So it's been going straight up, right? Well, what has the S&P 500 been doing? It's been going straight up. So right now, this P&L curve is literally a product of a market that's going one way. So I don't look at this and say, hey, I'm so skillful. Look at me. I got a great P&L curve. Yeah, it's outperforming the market for the last year. And I mean, even in 2022, right? Because I didn't really lose in 2022, but I didn't really gain in 2022 because the market was in a bear market for the entire year, basically. When I look at this is I'm here to protect and preserve that capital. This was a substantial move. You can see these little step ups. That's me just in a money market fund. And then when October came, I saw the opportunity after the S&P 500 went through a 10% correction, right? I'm literally just telling you this once again, so you can get in my head and understand why it is that I say the things that I say sometimes. This was the 10% correction, right? We had two of them, right? So the start of the year in 2023, we moved up and I didn't get in, right? And then it came, well, I mean, there was trades that I took, but nothing crazy as far as like my main portfolios. We came back down. This was about a 9% correction. Then we started to see this consolidation here, very whipsaw, and then it went up and I was like, I still didn't bite really. And then we went through the 10% correction. This is where you go into negative gamma territory and you see big rips to the upside, big rips to the downside. And it wasn't until here in this turning point that we started again, I started feeling a little bit more confident. So we caught this entire move. I caught this entire move, okay? That was the move that we caught. This move in the S&P 500 is what, like 20%? 30%? I don't know. Come on now. Come on now. What's it doing? I gotta go. Come on. Come on now. Come on, ding-dongs. Come on. All right, my little tool's not working to draw. There we go. You know, roughly, yeah, 26%. My P&L, I think, is it's like 50 or 60 in that move. Why? Because of higher beta names. And during that entire process, I was just looking for tight periods of contraction. Now, right, we've been in a strong move. We haven't seen more than 3 days down in a row or even like a 3% pullback. It's been a very long time since we've seen a day that was down 2% on the day. I'd have to pull that data, but we haven't seen that. And now, this is also taking place when HYG is breaking down today from a consolidation. Okay, this is also taking place when the 10-year yield is reaching pretty much up to a new high for the year. This is happening on the back of a rising dollar that's reaching to a new high for the year. These are all now starting to get a little bit more concerning. This is where I kind of get into the point where I say, you know, it's going to be a much more difficult ride. I think the easy money was made, and now it's time to see what real skill looks like, because this rise that we've seen in the SPY and the S&P 500 in the Qs in NVIDIA, I don't think that required any skill. I think it was a one-way ticket. Real skill is going to be shown for who can last through the periods of consolidations and the pullbacks. Till then, the trend is still up. We're above a rising 5-day moving average. Well, we're at the 5-day moving average. That's kind of neutral right now in the SPY. We're in positive gamma territory, which is 52.30 is the flip line. Okay, so all systems go right now. If that changes, I'll bring it up. That's all I got for you on today's episode, everybody. Thanks for joining today's live stream. AA, thanks for being here. Gianni, Mad, Aces, everybody over there on Twitch and then YouTube as well. I see some familiar names there on YouTube as well. Thanks for all tuning in. I appreciate it. I'll see you on the next live stream.